All right, so before putting money into any particular coin, you want to make sure that you do your research. So there's a general checklist that you can go through in order to be able to see the fundamentals behind a particular coin project, because we are also dealing with technology, right? See, crypto in and of itself, it's not just money. It's kind of like a hybrid of many things, right? We're talking about money. It can be an asset or commodity. It's network. It's software. It's ledger. It's all these various different things. So it's kind of like its own particular um, category in and of itself. So here are some things you can do when you're researching a coin. Most new coins are listed on an announcement thread. They're called ANN threads, and you'll see this over on Bitcoin Talk, right? So there's a site called bitcointalk.org, and you can basically look at the announcement, and in this it'll talk about the various technological specifications. What is this coin having to offer, and you can look at market capitalization, so you can see how much room does this have to grow. Is this coin undervalued? And so what the market cap is, to simplify it, it's just the supply multiplied by the price, right? So obviously Bitcoin has the highest price based on its supply, so it has the largest market cap. And then it's also important to look at things like supply distribution, right? Does it have a fair distribution, or is the distribution centralized? Do the developers control a majority of the supply? If they control too much of the supply, then it becomes difficult to be an investor or a trader in it, because we don't know if they're just going to dump on the markets, right? At the end of the day, you're just competing against other participants in the market. And if someone controls, let's say, 50% of the supply of a particular coin, that is very hard to compete against that, especially if it's a coin that it really didn't cost them anything to create that supply, right? So, a developer can just launch a blockchain or cryptocurrency, arbitrarily give themselves a certain percentage of the supply, and it doesn't cost them a cent to do so, right? So sometimes during, ICOs and things like that, you might have a certain percentage that they keep for their development, but if that percentage is too high, then you probably want to stay away from the coin. And then rate of inflation. So rate of inflation is the amount of coins that are created every day on the network. So if the rate of inflation is really, really high, then chances are it's likely not going to be a very good store of value, because that inflation is going to erode its purchasing power, right? Because essentially the value is pretty much determined by supply and demand, right? And if the supply is much greater than the demand, then the value goes down. But if the demand is greater than the supply, then the value goes up. And it's also important to look at trading volume, as we mentioned before, liquidity, right? So you can basically adapt your specific type of trading strategy based on the volume, right? High volume markets might be good for breakout trading, whereas low volume illiquid markets, not so much. They get a little bit more spiky. And then you also want to make sure that a coin or project has active development and community, right? Because like mentioned before, value is only determined by community support and its participants. If a certain coin or project has a very weak community or no community at all, then it's not going to have much longevity. And if it has no active development, we call these dead coins, then chances are they might get delisted, and it's also going to lose community support. So you want to just make sure that you're not trading anything like that. And then news events. The interesting thing with these markets is that news events generally affect the price, right? You could have like a bullish news event and a bunch of people will start chasing the price, and the price will start to move up, right? So, people say that everything is kind of priced into the market, efficient market hypothesis. But what I've seen with crypto is that this isn't really applicable. You get a lot of what's called last minute shoppers, people who just trade purely based on news events. And, they'll just start chasing price. And if it's a big enough event, it could actually trigger a huge rally.